Welcome back to another episode of Money in Minutes. It is yours truly, Stock Market Daddy, here with another opening trade in the moving average trap zone. All right, we are trapped between the 200 period moving average and the 50, and below that is the 21 period moving average. We went ahead and jumped in right at the open. Not a good entry. Why? Because we got faked out. We anticipated a red Marubozu candle, which as you can see has turned into a green tail bar, and we also entered the trade before we finished setting up our chart. And one thing we like to do is fill the gap on this channel. Okay, we fill the gap so that we can see the continuation from the previous day. This is how we trade the open, with confidence, conviction, and consistency. All right, so as you can see, this gapped up open has turned into a huge Marubozu candle. So now we've already entered a put to the downside prematurely, got faked out. All right, so now we are looking to bridge the gap. We want to know if we're going to have to cut this play because it's going to break through this resistance here, or if we are going to add a contract. The first contract was $89. Boom. So soon as we saw that push, we added a second contract for $67, bringing our average down to 77. All right, so now we have to assess the pullback. Is this pullback going to remain in the top third of this entire move up? As you can see, the levels on the chart have already kind of marked off that 50% mark, which is right, that horizontal line right above the green moving average. All right, and we have the top third being these two moving averages towards the top, these two horizontal lines. We saw a bear flag potentially forming, so pay close attention to that. Don't forget to visit stockmarketdaddy.com to take the assessment and assess whether or not you have a problem gambling. You can click on home, go down the drop down menu, right under what is options. I want you to select problem gambling awareness. Scroll to the bottom of that page, click the link for take the assessment. It's about a 7 to 8 question assessment for you to quickly answer, and it'll let you know if you meet the criteria for a potential gambling disorder. All right, because we don't want to be disordered. Okay, we want to be able to have a good time, be entertained by trading, and make some money. All right, so as you can see, following the flag or the fill-in, we have a bear flag. So this is also giving me confidence that this thing is going to snap and head back towards our moving averages, along with the fact that we have a 200 period moving average resistance, along with the fact that we have two other horizontal lines and levels that represent resistance. This push past those two is a bit concerning, but the fact that the gap is an extension of this green Marubozu candle, and that we are already looking to make a new high. The fact that this push right here could potentially be a new high or a failed new high is giving me confidence that we will continue to the downside. All right, so I'm being patient, I'm being mindful. I jumped in too early, but I corrected that by adding to the high. As you can see, we continue to pull back. Now, this was the beauty of me adding a second contract, because had I not added a second contract, I would still be much further down with a likely slim to no chance of recovery. So boom, right here is when I finally broke even. A little flash in the pan of breaking even, but it still was not far enough for me to get out of the play. So again, watching this happen. Now look at this. Now look, this is as far down as it came. Now when we see a green candle appear and take out one of these red candles, we're going to consider that to be our point of the turn, right? So that's where things turn at, right at that pullback. So we're going to know at this point that we have stayed above the 50% mark, but we may have breached that top third. We may have breached that top third. And again, this is the trap zone, because as you can see, the further we go down, we continue to be stuck between significant moving averages. Now look at that pop. That pop right there is signaling a move towards a new high. But we want to stay convicted for two reasons. One is it did stay in the top third, but because of that move down, we're going to consider this to be the first interruption. And typically when we get an interruption in the midst of a smooth move, that interruption is like the halftime show. So that interruption typically is about halfway through the move down. So the fact that we got the first interruption halfway down, we have 3 levels of resistance above us, and we have a huge move up to start the day, I'm very convicted that we are going to continue to move down toward that 21 period moving average, or that green line. But why did we get this push up? Well, pay attention. If you notice, we have this 21 period moving average crossing the 50 period moving average. That's a moving average crossover. All right, so anytime we see that, I need you to understand that it represents something. And if you're not sure what it represents, I want you to go into my playlist and I want you to watch the chart code playlist. And in that playlist, I explain across a number of videos the power in moving average crossovers and when the moving average crosses the price. All right, so those are concepts that you gotta lock in and understand. Those concepts are gonna come out throughout your experience. All right, and you get to develop and figure out where to place those in your trades, those thoughts, those actions, those beliefs. Okay, now we are continuing to the downside, hoping that we close this gap. But more importantly, we just want our 20% return. All right, because a lot of times the gap fills happen in halves themselves. So it's not going to just come and fill the gap right away. That can happen, but it's not very frequent. So we're looking for it to come down, flirt with the 50% mark, and then continue back to the upside. All right, stockmarketdaddy.com. Go take the assessment. If you want to intro to options, that's a great place to start. And please comment down below. Let me know if you are familiar with what this concept of filling in the gap. Do you fill in the gap manually, visually? Do you do it mentally? Is this the first time you've ever heard of that? So again, noticing that this blue moving average has curled. All right, so we had all the moving averages pointing up, and then this first one that just curled. So this is like our first sign of a U-turn. You also could think about it as the first halt, because that blue moving average basically intercepted the move up from that green candle. So that green candle was moving up, and that blue moving average caught it. And then we have the red candles taking out the bottom of this green one. So that is similar to the MA halt from the call side, but now we have a moving average halt, or what I like to refer to as an interception from the upside. So it's normally a domino effect. So first we're going to have this blue moving average curl. Then we're going to get power from the candles to the downside. Then before you know it, the white moving average will curl with some more power to the downside. We're going to touch the 21 period moving average. That might give us some pushback, some power to the upside. We want to see the quality and assess the quality of that move up. And then if it fails, we will continue to the downside. And the 50 period moving average is normally the determining factor of if we are truly gonna break through the support level and make new lows, or if we're going to bounce and go higher. So as you can see, we are chipping away. Look at that move down. Beautiful move down. Beautiful move down to touch the 21 period moving average. Again, patience is critical. Patience is critical. I entered way too early. Had I waited to purchase that first contract, this would have been a quicker profit-taking experience, and I may have even had more money on the table by adding 2 contracts at resistance instead of adding 1 contract at the open. All right, so here we go, approaching a 50 period moving average and preparing to take profit. All right, we can get excited when we see gap ups and gap downs in the market, but you have to still be patient and play them accordingly. You gotta have your options math in check. All right, subscribe to the channel, please. Comment, leave a like this video so I can continue to create more videos like this. Share this with somebody who may be struggling in their options journey. Peace and love, and I hope you get rich. I'll see you in the next video.